This is by far the best supply and demand trading video that you ever watch in your entire trading career. Ladies and gentlemen, what's up, happy people? What's up, everybody? Happy New Year. Happy 2025. I understand 2024 is gone and 2025 is here. If you want to change your trading career, it begins today. It begins now. So I've compiled a supply and demand trading video for you guys. Make sure you watch until the end of the video and you will enjoy. Let's go. Alright guys, so I'm pretty much excited, and especially for this year 2025, and I'm happy for the fact that I am going to be sharing a lot of trading content and stuff for you guys so that you can help yourselves when you are in your trading journey, and also to speed up the learning process. And for those of you who are beginners and those of you who are expert traders or intermediate, please watch this video, and I'm pretty sure that you will definitely get something that you are going to like and add on to your trading system. All right, so without further ado, please make sure you have a pen and a paper and you are writing and recording these notes as you are watching. And I'm telling you, I'm really telling you, I really put my time to prepare this for you guys. All right. So supply and demand. What is supply and demand? And this is basically how I see the markets, the BGFX way. So as a trader, you need to understand the concept of supply and demand to be successful. So I really need to put it out there that I'm not saying that this is the only trading strategy or this is the only trading system. There are so many systems. Basically, I don't just trade supply and demand. I trade supply and demand among other concepts, which I believe I'm going to share on this channel. So I'm not saying that this is superior, but I'm saying that this, as a trader, I believe you need to understand supply and demand, for the fact that supply and demand is the driving force behind the Forex currency pairs and price fluctuations that you see on the markets. This concept that is derived from basic economics. So supply and demand is derived from basic economics. You know, you're buying and selling, the basic buying and selling that we know. That is, every financial market that we know is based off of supply and demand. We see supply and demand every day in our life, and we are actually participants everywhere, whether we are buying an iPhone product, whether we are buying your earpods, whether you're buying a car, whether you're selling something, you're actually participating within the supply and demand economics or supply and demand system, right? So when demand of a certain product or service exceeds its supply, price will logically rise, right? When demand of a product exceeds supply, price will logically rise. And I think this is a system that we have seen time and time again, especially with Apple. They advertise their products some months before, and they make sure that on the day that they're launching the product is not in stores, or in other words, is limited in terms of availability. Why are they doing that? They are creating hype while they are making sure that the number of products are very few, to make sure that when they launch or when they put them in store, they are already pre-ordered and everybody wants to have them, and price. And it makes sense for them to have a high price for their product. So when demand of a certain product or service exceeds its supply, price is most likely going to rise, right? So keep that. Similarly, if supply outweighs demand of a product or service, price will decrease, right? If we have a lot of, let's say, iPhones in the markets, like you can buy them from any store, they are everywhere. Everybody's trying to sell something, and there are only a very few people to buy the product. We are most likely going to see the price will drop. Why? Because people are just trying to sell. People are just trying to, and you can actually go and bargain for price. You can actually go and negotiate for a lower price, knowing very well that the product that you're looking for is flooded in the markets. So when something is in the markets and there's oversupply of it, you are most likely going to see price decrease. So if you apply this concept within the markets, oh my God, you are really going to love. And I need to mention that it's really okay for you to know technicals. It's really good. But if you do not understand why something is happening, which is what I think most traders are doing, they're just looking at candlestick patterns, they're just looking at charts without really getting a context of what is really happening, without getting a clear picture of what is really happening as far as supply and demand, or as far as buying or selling is concerned. So if we do apply the same concept in the markets, right? Demand exceeding supply on a currency pair, price is most likely going to increase. And if supply exceeds demand of a currency pair, you're most likely going to see that price is going to drop. So if we keep that in mind when we are trading, we understand that when we see the market selling, we know that there is oversupply of something. When we see the market buying, then we know that there is high demand of something. Therefore, it makes sense for us to buy, so that if we are to sell, we are going to sell at a high price and make profits, right? So what really drives S&D? So basically, there are so many factors that influence supply and demand or the markets. But I just want to speak as far as the markets are concerned, whether it's futures market, Forex market, crypto market, synthetic indices market, any market that you're looking at where you are actually trading as a trader, a day trader, swing trader, or position trader. Geopolitical instability or geopolitical events, whether there is something that is happening around the world, and as far as politics is concerned, you will see that price will shift. Why? Because whatever that happens, it affects investment portfolios, and people tend to move their products or to move their money from certain high risk products or high risk stocks or high risk currencies to stocks or instruments that tend to be a bit safe. For example, you'll see that when there is a lot of chaos, people tend to hold a lot of gold. Why? Because gold has a history of storing value, and in such times of uncertainty, you see, or instability, you see that people tend to hold gold, right? So you see that another thing that drives supply and demand is basically the market sentiment, right? This is generally the sentiment. This is generally what people are thinking about the markets, what investors are thinking, what other channels are actually thinking about the markets. It tends to move price. Fundamentals such as your interest rates, right? Inflation rates, gross domestic product. So this is basically usually controlled by the central bank of a nation, and they try to regulate or to control things like inflation, interest rates, and obviously the gross domestic product, which is overall everything that the country would have actually acquired or achieved per given time, and things like your employment rates, things like basically, I think these are some of the major tools or things that actually tend to affect supply and demand at a bigger scale. Then we have political events, right? And I'm sure that we saw recently that the president of the United States of America, Donald Trump, was elected as the president of America after Joe Biden. And we saw during that week, right, that before the election, there was a bit of like the market were a bit unstable and consolidating. Investors were not really sure that whether they should buy or sell, whether they should hold their positions. But we saw the day that the results started coming in, we saw the markets were buying, the stocks were actually pushing, and we saw for the first time in a long time, for the first time actually in history, we saw Bitcoin hitting the price of $100,000. Why? Because generally people who were holding on to the cryptos or to Bitcoin, they actually had a good feeling that, you know what, we think Donald Trump is actually a good president, and therefore we think we are going to invest. And we're seeing right now, because of AI, because the president of America actually believes in technology, and we see that he's a friend of Elon Musk, obviously, and they're supporting each other. And due to the fact that he believes in technology, we are seeing a lot of stocks are actually buying, they are rallying at the moment. So these are some of the things that do affect geopolitical. These are some of the things that do affect supply and demand. And as a trader, trust me, you really need to understand these things before you can trade, right? And I'm sure that right on the right side, you can see that I do have a chart where you see a very small stop loss and a high risk to reward ratio. In this case, it's a 1:17 RR, right? With a stop loss that is very, very small. Now, I'm sure that you have seen some of the trades where traders put a very small stop loss and a very high risk to reward ratio. This is some of the advantages that supply and demand allows you to actually have or to get, right? You're most likely going to be able to enter in the markets with a very tighter stop loss and a very high risk to reward ratio. But I'm not saying that this is the only way. No, but I'm actually saying that because when you are able to identify certain zones in the markets, then you are really going to position yourself well, and you are going to maximize on that particular trade. And I'm pretty sure that you know that for you to successfully strategy that gives you one risk to reward ratio. But this concept, I've been using it and we've been getting very high risk to reward ratios. Therefore, even if I lose so many trades, I know one trade is going to win. However, I need to emphasize this. However, my main focus is not to have a tighter stop loss. That is not my main goal. And I've seen a lot of traders, they are so obsessed with trying to have sniper entries, trying to have tighter stop losses. That should not be your objective when you are in the market. You just need to position yourself, place your trade, have a minimum risk to reward ratio, and maximize on a trade, right? So supply and demand zones. Basically, supply and demand zones, these are areas on charts where price movement of a currency pair is likely to experience a change in direction, right? This is where price movement of a currency pair is likely to experience change in direction. And that's where we are watching as traders to say, I want to get myself in the market when price gets to this particular level, right? So, due to an imbalance between buyers and sellers, when price explodes out of an equilibrium state where demand is equal to supply, right? I'll explain this. I'll try to explain this a bit later. Now, as traders, we use these equilibriums or state pauses in price to identify supply and demand levels or zones in a trading market. Price pauses for a while as they find a balance between buyers and sellers. And I'm pretty sure that right now you are looking at this and you are saying to myself, I'm really not interested in theory. I want to just see the markets. Trust me, it's better to know why you are doing something before you do something. Many people are just going and marking lines, drawing lines all over the place, thinking that these are the drivers of the markets. You need to have a clear picture. You need to understand what is going on, who is who, what is what, before you can. It's not about lines. It's about understanding the behavior of human beings as they are buying or selling in the markets. So who are the key market players, aka the big guys? I like to call them the big guys, or just call them the key market players in the markets. So I want to emphasize that as retail traders, we have limited amount of capital. Yes, we now have prop firms that can allow you to trade with big accounts, right? But generally, a lot of retail traders do have small accounts, do have small trading accounts. And as a result, we are not going to move the markets. We're just participants, but the real key players in the market are these big guys. And who are these big guys? These are private and government investors. talking about people inducing millions in the markets, billions and trillions. And we also have hedge funds, right? Companies that are trading for people, either to protect certain investment portfolios or for certain reasons, actually. And we have governments, and these are central banks that I was talking about. They do own the currency pairs, they do control, and they tend to make certain policy changes that actually affect price. And then we need to also understand that we also have institutional investors who are also there for the profits, right? Now, when these big players enter the markets, they bring in a significant amount of buying or selling power because of the large amount of money that they do have. They do bring in a significant amount of buying or selling power that can shift the balance of supply and demand and can be seen in the markets. So I'm trying to explain this for some people so that they can see. Let's assume that we do have the market creating like a range like this, right? Something like this. This is what we call a state of equilibrium. In other words, the amount of buyers and sellers is almost equal, right? But somebody steps in. Let's assume that we have buyers who let's assume it's 5 million. Let's assume it's 5, right? And then we have sellers with 5 million. You see that the market is just going to stay within the range for quite a long time. Why? Because the market is in a state of equilibrium. Think about it. I'm sure you know the game of tug of war, where people are pulling a rope against each other. If the same amount of force that is being applied on both ends is equal, then you see nothing happening. But if one side of the rope is stronger or adds more force compared to the other one, you see that these weaker ones are going to be pulled to the side of the greater force. Let's assume that on this one, somebody decides to aid on 50 million on the sellers. You see that price is going to shift out of the range, creating what we call a strong leg out, also showing us signs that this is a supply zone where sellers took over from buyers, right? So I'm just going to go in detail as we go, but I just wanted to illustrate that for you guys so that you can understand, right? So types of supply and demand in the markets, right? Types of supply and demand zones in the markets. We do have what we call continuation patterns. Continuation patterns generally saying that we are trying to continue in the direction of the market. So here we have a drop, base, drop, a drop, base, right? A drop. We have a drop, a drop. Let me just put this red. Okay, let's make this blue. We have a drop, and then we have a base, and then we have a drop, right? And then we have a drop. This is basically a market of sellers, right? So this is the basing that we see here. This is the basing that we see here. Okay. This is the basing that we see in the markets right around here, right? This is the basing that we see here. Okay. This is the basing that we see around here. And then, so this is, you see the market drops with sort of an impulse push, and then it bases, you see a consolidation. And then when we see that price based out, you see another drop again. You see another drop right here. The market is going to drop. And then we anticipate that the market is going to come back to test this supply so that we can sell. That is when we are thinking of placing a sell order to actually sell this trade. Obviously, you're going to use certain confluences. You're going to use certain things. You're going to use certain tools before you can actually trade. So that's a drop based drop. A rally based rally, you are in an uptrend or the market is buying. You see a rally, price pushes aggressively to the upside. Then you see a consolidation. In other words, an equilibrium state until price takes over again to create another rally that we see right here. And then we anticipate that when price comes back to this basic or to this demand zone, the market is going to give you a buy position, or you are going to position yourself to buy in the markets, right? That's a continuation pattern. Drop, base, drop, right? And then the market rallies again so that it can drop. That's it about the continuation patterns. Now let's go to the reversal patterns. Now with reversal patterns, basically we have two patterns. We have a drop, and then the market is going to base right here. The market is just going to base right here. The market will base right there. So that's a base, and that's a base. Come on. Okay. All right. So you have a drop here, and then a basing, and then a rally. Now we anticipate that when the market comes back, the market would have created a demand zone right there. That's where we are looking to what? We're looking to buy from there, based off of our confluences and everything that we are going to use our confirmation entries so that we can position ourselves in the market. Same applies with this one. That's a reversal to sell. You have a rally, price pushes up, bases, drops, and when price comes back, now we are looking to what? To sell from that supply zone to sell. And I know when you're looking at it in this way, it looks so easy or it looks so confusing, but trust me, I'm going to make it much more easy for you as we go onto the charts, and also as I explain this. Now you need to understand, or you need to know these important notes, right? You need to understand that rally, when we say rally, this is basically buyers exceeding sellers. In other words, buying. When you say drop, sellers exceeding buyers or selling. Base, this is where you see sellers and buyers in a state of equilibrium. In other words, there is no movement or consolidation or basing rather. Now we need to go to the next point, which is S&D zones, supply and demand zones according to candles, right? Now, these are high probability zones, and I need to show you that. S&D zones according to candles, or high probability zones. Now, according to me, this is what I think is the best zones when you're looking at supply and demand. I know so many people use certain tools, so many people use certain things, certain confluences, but I think for a start, even if you are experienced, if you understand these fundamentals, you will have a clue, because remember we are trying to see where a lot of buying is happening, a lot of selling is happening. If you are a trader, think about it this way. You get yourself in a market full of these big players I was explaining about, the big guys, and you have your small trading account or little knowledge, and you need to understand that we are retail traders. We as retail traders, we are trying to get money in the markets from people who are trying to get money from us, and they do have sophisticated equipment, they do have large chunks of money, they do have human capital, and they do have sophisticated concepts. Some of them are simple, but just think about it. They've invested so much in terms of knowledge as well, right? So you want to try and be in line with them. You don't want to trade against them, but you just want to try and trade with them. Okay. So this is what we're trying to do. So here we have, indecision doji structures, or in other words, a rally base drop, Now, I want you to see this kind of a structure whereby you see a push and then it bases with a doji or indecision candle. How do you see that? You see a very small candle with wicks and a very small body. That's an indecision. You're trying to see that basing that is happening. So if you go like on lower time frame, you see that there was a bit of basing or consolidation happening here. And then price will push price away from that zone, forming a rally base drop. So this is where we are going to mark our supply zone. Okay, let me use this. This is where we are going to mark our supply zone. Okay, so now we do have a supply zone that we are saying that when the market comes back to this particular level, we are looking for sales. Okay, notice a push, a basing with a doji, and then a very strong leg out away from price, and then we anticipate when price comes back. That's a high probability zone. Now, someone might say to me, how do you mark these zones? So generally, I'll show you when I'm marking the actual pricing, and I'll try to explain basically the 2 ways or the 3 ways that people do mark, and my favorite I'll show you. Okay, same applies here. Now we have a drop, and then we have a basing, and then a rally. You see that the market creates this nice, amazing pattern. I want you to take note of this indecision or doji structure. Okay, that happens here. So this is signaling to you or giving you a clue that there is a basing that is happening, and then we must see a strong leg out, a strong push or large candles. Okay, so this becomes my demand zone. And what is my demand zone? A zone that I'm looking to be buying. So this is a supply. Okay, this is a supply. I need to make sure that I write that down. This is a supply zone. Okay, and then I just want to clone this. This is a demand zone. This is a demand zone. Okay, all right. All right, this is a demand zone. Now we anticipate that when the market comes back, okay, we are looking to be buying from here. And now I'm going to show you, I believe, in the future videos of how price should come back and what you must look out for before you can trade, and where should you look for these patterns. But for now, I just want you guys to understand what I'm talking about here. Okay, so now we do have another second kind of structures that I do like to see: engulfing structures, or in other words, drop based rally or rally based drop, but with engulfing structures. Okay, what I mean by engulfing structure, we want to see an engulfing candle. Okay, we want to see an engulfing candle happening, candle formation, whereby the previous candle, this candle engulfs the basing or the last down candle. Okay, that is very, very crucial for me, or very, very important. So in this case, we can see we had a basing with an engulf. Okay, and I'll show you the variations of the engulfing zones as we go in the markets. Okay, so we do have this as our demand. Okay, this is just our marking here so that I can help you to identify this. So that's a demand. So we anticipate that when the market comes back, we are looking to be buying from there, right? Something like this. Now we have a rally based drop. Again, we have an engulf structure, a very strong leg out, a very strong candle pushing and engulfing. This drops. This becomes your supply zone, and we anticipate that when the market comes back to the charts, or when the market comes back on the charts, we are looking from, like on this particular supply zone, we are looking to sell, to look for sales in the markets based off of our confluences, confirmation entries, and where we are in the markets, and according to higher time frame structure. There are so many things that you then need to apply before you can just say, let me just buy on every indecision doji candle that I see, indecision structure that I see. There are so many things that you then need to look out for before you can say, I am buying and I'm selling. All right, so let's now go to the next point, or the next thing that I need to explain to you. And I hope at this moment in time, you're really enjoying the content. And I would like to say that if you are new here, please make sure that you like this video and you subscribe so that you get notified. And also, if you are here watching, please like the video and share with your friends, share with your traders, so that they get to benefit as well. And when you do like, you also help me create more content. Okay, that will help you. I want this to be a hub of traders and help as many people as we can. All right, so let's go to the next chapter. Now we are looking at drop-based drop, rally-based rally, continuation patterns within the market. So we do have on the left, we have the doji zones, and I've explained we have the market dropping and then it bases with a doji indecision candle. Then we see a very strong push or a very strong leg out. That's your basing. Obviously, when you're marking your zone, you're marking your supply and anticipating that when the market comes back to my supply level, I'm looking to sell the market. Okay, excuse me for these patterns being tighter. I'm trying my best. Now we have a push and uptrend, a continuation pattern in the to the upside. We have a rally and then a basing with a doji indecision candle. Then we see a strong leg out. Again, price pushes up. This becomes your zone to buy from. Okay, you're looking to buy from that particular level, and then when you're buying there, you anticipate again that the market should come back to this zone so that you can buy, right? So that you can buy. Now same applies. Now we have engulfing structures. Okay, is rally base rally in the form of an engulfing structure. Obviously this becomes your demand zone such that when the market comes back here, you are looking to be buying so that you continue. Okay, and same applies here. We have a very nice down like drop-based drop or continuation pattern to the downside with an engulf structure, and obviously this becomes your supply zone that you want to look out for. And when price comes back here, you are anticipating that you need to sell from that particular trade, right? This is very, very interesting. The reason why we are emphasizing on these patterns is that we've seen that a lot of traders and many people are confused. They really don't know what to do. Like, what should I do? What should I look out for? But when you're looking at this, then you know that, okay, at least I have this and I can be able to look out to trade. So let's continue. Now, there's a special kind of supply and demand zones. I call these variations, right? You'll see that the market likes to hide. Sometimes it's not usually. Remember when you look at the previous zones, they look alike, but these indecision or these bases were actually, it was actually something like this. It was actually something like this, whereby you see a drop and a bullish candle. But in this case, you are seeing that the candle itself is black, just like the other candles. So this is what price sometimes will do. It will hide. So I call them hidden zones. You see a drop, a basing, especially with a doji indecision candle, and then a strong leg out, push away. Again, that becomes a very strong supply. Many traders and many people, they don't understand, or they're leaving out this. They are confused why price 10 to 10s at specific levels, and they are not aware. This is because of things like this. Remember, price is not perfect. So we are trying to be perfect in an imperfect field or in an imperfect market. Okay. So we're just trying to aid or try to keep up with it by identifying these things. Same applies with this rally base rally. If you see, initially this candle was actually a black candle. It was actually something like this, an opposing candle, right? But sometimes the market likes to keep it bullish. You see, these are uniform candles. How then do you know? Until you identify that I see a doji. So that's basically, I'm thinking this is a basing. Okay, this is a basing, and we know that when the market do come back, we are waiting like snipers around these levels, and then we like to buy. All right, so if you can be able to identify these zones, you are really actually in a better position and you're good to go, especially in times where you're trying to take your profits and you see price reversing from a certain position or from a certain point, and you're wondering why price is standing from that particular point. So these zones, if you can identify these zones, you're actually at an advantage. So as a trader, it's very, very important for you to understand these few things that I'm going to mention here, right? Before we go onto the chart, just to mark a few zones. A very good supply and demand zone must break market structure or key market levels. We will show you when we are actually looking at the market. So it must break what? It must break market structure or key market levels. These are some of the things that we look out for. And then you must see a very strong leg out or long candles away from the base. Normally they are engulfing candles or very long candles you see as we are going on to the actual charts, right? And then the last up or down candle responsible for breaking structures is usually the basing that we see. Now, great zones are found on higher time frames. I need to emphasize that. Yes, we do have scalping time frames like the M15, M5, M2, M1, but I'm telling you that most of the best zones, they are found from the H1 time frame, H4, the daily, the weekly, and so forth. I'm not saying that on lower time frames you will not see, but think about it this way. The majority of traders or people who have large chunks of money, they are not trying to trade so that they can place a trade today and make profit within the next few minutes or few hours. They are actually position trading, maybe thinking about placing a trade and take a profit in the next 2 months or 3 months or a year or 2 years or so. So they are not looking at the time frames that most retail traders are looking at. They are looking at time frames like the daily time frame, the 2-day, the 3-day time frame, the 1 week, the weekly time frame, the monthly time frame, right? So these are some of the most strongest zones. However, there are so many things, techniques that we use. We can trade within the bigger time frame zones. We can refine these zones. We can also get inside zones and look for certain zones. Now, a great zone or great zones are found above 50% Fibonacci levels or Fibonacci clash zones. So in our course, basically, we do have what we call Fibonacci clash zones. And for most of you guys who are really interested in our mentorship program, we do have a mentorship, professional mentorship program where we teach traders to trade within the markets. So if you're really interested, just click the links in bio and click our contacts, and also see the contacts on the screen so that you can contact us, or you can also speak to me directly on my Telegram channel or the WhatsApp number that you see on the screen, or visit our website so that we can speak. I actually give people free consultation, trading consultation calls, where you get to learn about our trading course, our full mentorship program, and also I get to learn about the challenges that you are facing as a trader, right? So you also want to trade zones in line with market trend or market direction. So ladies and gentlemen, I think it's a perfect time now that we go straight to the charts and we are going to try and mark these zones. So I really need to emphasize that in this content, I'm not trying to mark these zones in context. I'm not trying to be as perfect as I can, but my focus is for you guys to be able to identify these zones, what I was talking about, what I'm talking about, and try to explain as much as I can. So let's get to the charts. All right, guys. So we're looking at the markets. We're looking at a chart of AUD USD on the 4-hour time frame. So I just wanna just show you some zones that we were talking about. So I'm just going to start right from the top here. So we can see that the market sort of reversed right around here and then left us a zone, or in other words, a rally based drop. And I'm just not going to talk about whether it's fresh, whether it's not fresh, or whether I should have used this, but I just want you to identify. Notice this, a rally, and then we have a basing, and then we have this drop. So we look at this last up candle before we dropped, and if we are looking at that particular candle from what I'm showing you guys, you will see that we had this bullish candle and then a very strong leg out, a very strong engulfing candle. If you remember what I told you guys, that becomes a very strong supply. So before I continue, I want to show you how you can mark the zones. So there are so many ways that you can mark these supply and demand zones. Some people, or you can mark them from week to week, from this week to the highest point of that particular range, something like this, and then you extend to the right. That's how you can also mark it. That's how you can mark it. Or you can mark from this body, the lower body, all the way to the upside like this, and then you extend. Some people, or you can mark it from this point where this week start, and then you just mark it as a week zone. Personally, I don't like this way. Sometimes I do mark like this from the body to the week, or from the week to week. It depends with where I am. So if we are marking from body to week, so I'm just going to mix so that you can learn. So we can see that we had a very nice rally based drop, and we can see that price stepped in, and then we see a massive sell for 1, 2, 3. That's like 12 hours. Then we dropped again. I'm just going to delete this and remove this. We dropped again. We see another rally base and drop, right? We can see that we have a very strong leg out in form of an engulfing structure, and then a strong leg out. And again, what happened? The markets, if we are marking, you can mark from here all the way up to the right. You can see that the market came back inside this tapped, and then we sold, right? That's a very strong supply, or in other words, this was a rally based drop. Okay, now if we look here, now we have a drop and then a base, a drop. Now according to the notes that I was giving you guys, if you remember, I said we have a special kind whereby this is a continuation pattern, and you see indecision or doji candles. Look at this doji candle. It's very small body, very large wicks, and then a very strong leg out and an engulfing candle. And then that becomes, if you're marking, you can mark from here, or you can mark from the body all the way up. Now see what happened after the drop. You can see that the market shot down, and then 1, 2, 3, it came back, tapped in, and then we see this massive sell. Okay, we see this massive sell. Now if we are to break this structure again, I hope I'm going to do a market structure video where I'll show you all these things. Okay, we can see that the market dropped again. If we are to identify, we see the extreme. When I mean the extreme, that's the rally, the base drop. The reversal point of this whole swing was this section, and we can see the last up candle was sort of an indecision, but this section or this zone was actually candle. You can very much interested in. I could have used that. I could have marked it. I can mark it from this doji in between and doji, and then we just extend. That's a very strong supply. Now the market dropped again, based and then dropped, right? You can see a drop, a base, a drop, a strong leg out in form of an engulf. Now we have another basing. Like I said, I don't know why I keep on confusing. I told you guys, I can mark it like this, or I can mark it like this, right? So that's a very strong zone supply level that when the market comes back, it's a very powerful zone. Now we have a drop, base, drop. Now I want you to see, this is sort of like a consolidation kind of a zone, but I want you to look at the kind of candles here. We have a basing, especially with the candles that I like to call railroad track rods. They are almost equal, and then we see a doji in between, and then a very strong leg out. This is a very strong supply level. You see these key features: a basing, indecision, engulfment, or strong leg out. That's a very, so in this case, how do you mark? In this case, you can mark from this body all the way. The reason why I chose this one, that's like the lowest, the candle that is like the lowest point in that particular range. So you can mark it like this, right? And then you extend, okay? Or you can mark according to this doji, and then all the way to the upside like this, and then you extend. That's a very strong supply level that when the market, if the market does come back, that's a very strong supply zone. Drop, base, drop. Let's continue. We see again we have another push here that broke market structure, and you see a rally base. So you can actually call this a consolidation, or you can call this a rally base drop. Engulfed, very strong leg out. If I'm to mark again, if I mark like this, you see guys, if I do mark like this, sometimes the market might actually miss you a little bit. But if you have marked like this, see what happened. The market came, tapped, and then dropped. And again, we see another drop, base drop with that indecision and a strong leg out. Look at that. That's a very strong supply zone. We dropped base again, drop, breaking structure. Remember I said you must break structures. Okay, you must break structure. Look at this. That's an engulf and a strong leg out. Now again, if you mark it like this one, you would have been tapped, or you could have marked it like this. It's all the same. It just depends with your preference. So if I extend it to the right side, you can see we sold, the market came back again and sold massively, right? And then we dropped, we broke structure again to the downside. Okay, so within this range we had so many zones. We had a drop, base drop here, which was in form of an indecision engulfment right here. Why do I keep on using this? Okay, I think I need to, let me do this. I need to change this. I need to change this. I think it was this one. Okay, all right. I think now it's okay now. Okay, so that if I happen to, so we have drop, base drop, indecision, strong leg out. We retested again with the rally base drop with an engulfment. See what happened? That's your supply zone. Market tapped and sold. Now we can see that we had one that broke structure. This one, drop, base drop with two doji candles, a very strong sharp shoot to the downside. That's your supply zone. So in this case, you can mark with one, or you can just mark them both, the indecisions, and you extend. You can see that the market came back here and then sold massively. We again broke this, or took out this low. This was a break in market structure, or break in a low. And again, we see we had an extreme zone, and then we also had this drop, base drop within that range that broke structure. And again, the market came back. So you can mark this doji like this, or you can just mark it like this. It's still okay to have this supply. Notice the indecision and a very strong leg out breaking structure. We again tapped and we sold. Now looking at this, we broke market structure again, and then we also had this engulfment, or this engulf supply zone that we have, which I believe in the future is going to hold weight. We pushed again, we retraced, and then we broke market structure. The market is just dropping. This is a seller's market. You see this one broke structure. Notice rally base drop. Okay, and it's an engulfment. This is a very clean textbook example. That's a very strong supply. We drop again, and then we retraced. We came back and we took out this low point, and you can see that we had the market creating an indecision candle, which you could have marked like this. I'm actually trying to look at hidden zone candles so that I can show you. So I think you guys have understood these basic structures. So now I'm trying to look at, notice this very nice drop, base drop, right? So you can also mark it with lines sometimes, the low point and then the high point. Still nice. Then some people, or sometimes I like to do this. I just mark it like this. Okay, I put two lines and then I just keep it like that to make maybe your charts clean. It just depends with your preference. So I'm trying to look for hidden zones so that I can show you, right? I don't know if you can see here where a drop and then a basing a drop. Look at this key candle, this particular doji candle, this candle. You see this doji before a strong leg out, right? You would have expected to see a blue candle, a bullish candle, but it didn't happen like that. But the price was trying to hide something. This is why the market, so this was a supply with a strong leg out. That's why the market came back and reversed. But if you were just focusing on candles or blue candles, you would have missed this particular trade. So that's a hidden zone in the markets. Okay, that's a hidden zone in the markets. So I'm just trying to look for more hidden zones, but I'm actually seeing more drop, base drop, or continuation patterns for you guys. I'm trying to look for more hidden zones. So let's see. I'm just going to go back in price and then I show you. Yeah, right. Look at this, guys. We had a drop and then a basing and then a drop. Notice these doji candles before a strong leg out. That becomes your supply zone. That explains why when the market tapped here, it sold. Okay, even if it didn't sell massively, but that was the whole point. That was the whole reason why we saw the market coming back to actually retest those, like these particular zones. Okay, right. Look at this, guys. We had a rally and then a basing here and then a rally. Notice this doji candle. Okay, this doji candle, though this one was a missed. Oh, it wasn't missed actually. So you see a doji indecision candle right here and then a massive strong leg out. Now what happens is this: in the future, I want you to see that the market came and buyers stepped in from that particular level, even though it was hidden to a lot of traders. Okay, see, let me see if I can get one more indecision or one more kind of indecision candle that I can show you in the markets. Right, look here, guys. We had a drop and then a basing with a doji candle and it's hidden, right? We are expecting a bullish candle, but instead we got a black or bearish candle. You see the market step back in and actually gave us this particular trade in the markets. So ladies and gentlemen, I hope that you really enjoyed this particular video, and I hope that this 2024 you're really going to make a significant change, or you're going to see significant changes within the markets or within your trading journey, and you are going to apply everything that I am going to show you. Guys, until you really apply everything to the T, you are not going to see changes. So we are BGFX Trading Academy, and we are here to elevate your trading career and become a multi-pool figure trader within the industry, the industry leading trading education. So basically, gain access to the best Forex education in the world and benefit from a superior trading models. Achieve financial freedom with BGFX Trading Academy, the leading trading hub. Don't trade blindly in the markets. Our simple rule-based trading strategy and systems give you a clear head start and plan, designed for beginner advanced traders looking to get funded within the markets. So ladies and gentlemen, please, if you really loved this kind of content, please leave a like, leave a comment, like the video, subscribe, share, and a peace. See you in the next video.